And all that glitters is not gold. Gold is off today too, about inflation fears calming down. Gold is the perennial hedge against inflation. It's down around 6% over the past year. I suspect that doesn't worry Tom Palmer, the CEO of Newmont, the world's largest gold mining company. 6% here, 6% there, Tom. You're in it for the long haul, aren't you?
Good afternoon, Richard. We absolutely are in for the long haul. Prices might be off a little bit, but they're very good prices compared to where they've been over the last decade or so. So we're certainly enjoying the benefits of that, as are our shareholders.
And do you think that as an inflation hedge, particularly as we saw the ECB, the UK and the US and the Fed, worries of inflation did give a boost to, not an indirect as such, but we're back to the old game of gold being relevant?
I think gold is certainly relevant, and I'd encourage people to have gold in their investment portfolio across the board. But not only gold, I'd actually have gold equities, because we can also give good exposure to gold, but we deliver returns to shareholders. So we're paying a 4% yield at the moment. We're the only gold company sitting on the S&P 500, and we're competing with the best of them on that index.
And yet there has been tremendous consolidation within the gold equity sector. Do you think it's done? Are you now all so big that you couldn't do more?
No, we're not done by any means, Richard. If you look at gold mining companies, gold equity, publicly listed companies, there are about 1,000 of them around the world. That's 10 times more than any other commodity that's mined. You add up the value of all of those companies, and we're about 20% of the value of Apple. So there needs to be, I think, still considerable consolidation. And I think climate change is going to drive it, because you're going to need scale and life in your portfolio to underpin the investments to move to a net zero operation. So I think it's coming.
So let's read what you say. Mining is an energy-intensive business, with 88% of Newmont's energy used for mining and milling. As the company looks to reduce emissions, it will use strategic approach. But when I read that you're looking for 30% by 2030 and achieving net zero 2050, you can't do it.
We certainly have a pathway to 2030. And we have an aspiration to 2050. And I think the things we'll do to get to 2030 will certainly put us on that pathway to 2050. 3 key areas, Richard. One's a culture of continuous improvement. Every one of our operations looking to become more efficient. Second one is renewable energy. That's a step change as we move to renewable energy to feed our operations. And the third one is technology, and having the courage to back technology and work with the manufacturers of equipment for mining, so that we can introduce things like battery electric vehicles into the mining game. Renewable energy coming in over the grid for electricity can power those trucks as well as the mills.
Because of your intensity of energy concentration, do you fear, you're not quite fossil fuel verboten, but you're not but you could end up with investors shunning mining because of the energy intensity?
Mining is required for decarbonisation, so the world is going to need the metals that we produce. We are doing the things to reduce our energy efficiency, to reduce our reliance on fossil fuels, and produce the metals that are going to be needed to decarbonise the world. So we're an essential part of that value chain, Richard.
A few weeks ago, I asked this question of all people. I know the answer for you, so I'm going to ask it anyway. I'm going to give you a chance for an asset under the bed. All right? It's an asset that you can pop under the bed for a rainy day. You can have $1, you can have €1, you can have a Bitcoin, or you can have a bit of gold. Which are you going to take?
Bit of gold. It's been a store of value for millennia.
I think if you had
regulated, it's gold, but even better, have a Newmont stock sitting underneath.
Oh, please, punting his own stock, Tom. If you didn't do that, the board would have been after you. All right, I shall merely say, whatever you think, stocks can go up as well as down. Good to see you, Tom, as always. Thank you, sir.
Richard.
I appreciate it.
Bye-bye.